Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys, let's update our trading setup on the gold market as well. So if you remember, in general in the daily chart we're expecting to get some deeper retracement. There are some real reasons for that exist in the market. It's overall sentiment that suggests rising optimism, more demand for risky assets, sell-off on the United States dollar on the background of back into life and opening borders, victory, let's call it victory over the pandemic, and all this euphoria on the market press on the safe haven assets, make the pressure not only on the gold but the Japanese yen, United States dollar and everything. So, and from that standpoint it really exists the scenario where market could continue downward action, and we consider our basic major steps suggest that we should get gold somewhere around 1650 area. It's confidence support and reaching of the XOP on a daily. That could happen in different manner, but well, very probable that maybe we could get the head and shoulders, or maybe we'll get direct action right here. It's also possible, especially if tomorrow the Federal Reserve will tell something during the press conference. A trend on the daily chart stands bearish. Now we see the pullback up from the 1687 area, as we suggested. It also creates an agreement with the ABCD pattern. And actually we talked about in the weekly report. We said the first stage will be the pullback, and the way that the length of this pullback will be very important information for suggesting the overall shape of the market. The too deep retracement will open a road for a possible head and shoulders pattern, while moderate harmonic retracement, actually it's already completed, as you will see on the 4-hour time frame chart, suggests immediate downward continuation right to the XOP. That's what we will keep an eye on. So on the 4-hour time frame chart, market has hit our first destination point, as we suggested, in 17 even, 1705. We mentioned these harmonic swings on the market that, well, market follows very accurately. You could find them not only on this part of the chart, but also if you take a look, it's very typical for gold market price action. Here's as well harmonic swing on the market. Now it's completed. Simultaneously, market has retested the broken trend line, and kind of the kiss goodbye exists. That's response to the OP. That's response to the 1687 FIP support. It's normal. It's what really should happen, and this has happened. At the same time, you could see the very strong action to the downside. Here is acceleration, pullback on the harmonic swing. Again acceleration, again pullback on the harmonic swing, and now we stand at the point where market should provide the clarity. It should either turn down immediately and starts dropping to the 1645, or we could get upward action to the 17, well, approximately 1720, and then it could get more extended action to the 1730 before downward action were established. All these trading steps we discussed in our weekly report. So, if market breaks this area to the upside and reaching the 1716 level, take a look here, we could get the reverse head and shoulders. We talked about it. That could become left shoulder, head, moving back up right to the 1720. Then it should be right shoulder, and then extended ABCD right to the 1730 area. If you do not remember about this, you could read our weekly post and weekly report, and there we in detail talked about that. That will be the actually right arm of this possible head and shoulders pattern. So if market will show ABCD action up, it will be somewhere to the 1730, 1735, and then it could be large ABC top D pattern to the 1645. So all targets, all extensions with these levels meets the important levels on the daily, agrees with them. So that doesn't break the overall shape of the price action on the daily chart. It just changed the way how market will behave on intraday chart. So that's the second scenario. Speaking about this harmonic swing and scenario that already stands in place. So guys, here you could consider possible taking the short position based on this area. Because take a look, we have this ABC bottom, XOP is completed with this spike up. Market stands in the confluence resistance. So if indeed downward action will start, it will start right from here. You could place very tight stop. This upward deep retracement, now your stop should be just about this area. It's very tight stop. And well, it brings not much risk for the dealing with this trade. Also, you could keep an eye on this price action. So if we will get the grabber here, that also stands in favor of downward continuation. At least a moderate pullback up out from here should happen. And well, here this will be attractive step for a possible taking the short position. I'm not guaranteed that definitely market starts dropping, but I would guarantee that the risk-reward ratio, if you're taking the short position here and indeed market starts dropping, that will be a maximum risk-reward, because you will be able to place very tight stop. Those who are watching our videos very often knows that I call these points as the culmination points, because they provide minimal risk for your for the trade that you are taking around. They do not guarantee that you will succeed, but what they guarantee is that you will get minimal risk if you will take position at this point. So, well, we're currently at the first point where we intend to consider taking the short position. If you think it's attractive to you, you could consider possibly taking short position. If not, you could focus for a possible larger pattern that could be formed and shorters in the case if market will start upward action to the 1730 area. That's our second possible scenario. Until market stands below this area, we can't say definitely whether it will proceed higher or not. So to show us, market has to break through the confluence, market has to move above this area and continue upward action right to the 1760. That will be some improvement that we will get maybe a head and shoulders pattern here in upward action in the gold. Until this has happened, market keeps valid first scenario with a possible immediate downward reversal. So that's the situation that we have on the gold market.